Okay, folks, buckle up because today we're diving headfirst into a company making waves and headlines,
That's right.
Supermicrocomputer Incorporated, but you probably know them better as SMCI. Now,
Exactly.
this one's been on my radar for a while, and, maybe about yours too, because their stock's been on a wild ride.
Wild's one way to put it.
Haha, yeah. I mean, we're talking about a 52% surge, folks, a 52% surge practically overnight.
And all thanks to them, well, basically swapping debt for new shares.
Sounds kind of like financial alchemy, right?
Yeah, a little bit, but we're going to break it all down in this deep dive. Help everyone figure out, is this a roller coaster you want to hop on, or is it best to just watch from a distance?
Yeah, because, those quick climbs can sometimes lead to even faster drops, right? So we got to be careful. So to kick things off, what's got everyone so hyped about SMCI all of a sudden?
Well, the market's going crazy over this whole debt for shares swap. Like SMCI just issued a massive 61 million new shares, which usually would make investors run for the hills.
Yeah, that's a lot of new shares.
But, and this is the kicker, this move also wiped out like $700 million of their debt. So it's this interesting trade-off that's got everyone's attention.
Okay, so they're basically getting rid of debt, which is good, but they're also creating more shares. So help me understand this. Like, imagine the company is of a high, right?
Okay, I like where you're going with this.
More shares mean more slices of that pie, right? But doesn't that make each slice smaller?
You got it. That's exactly it. And that's the concept we call dilution. More shares in circulation mean each one represents a smaller piece of ownership. And SMCI's set up this whole tiered system, kind of like a staircase, as the stock price climbs, more and more shares unlock at each step.
So it's feeling like they're betting on themselves to keep climbing.
It's a bold move, that's for sure.
So right now the dilution's about 2%. But if their stock price hits, get this, $795, then bam, that dilution jumps to 11.3%.
That's the gamble. But here's the thing. The market seems to be overlooking that risk for now.
So are investors basically saying they think SMCI is going to be so successful that even with all those extra slices, everyone's piece of the pie ends up worth more?
Could be. You see, some analysts are saying this surge is a sign of serious confidence in SMCI's leadership and their ability to steer the ship, guide them through any choppy waters ahead. Others, they see it as a calculated bet on future prospects. It's like, hey, we believe in SMCI, they're going to make it big, so we're willing to take the risk.
So they're hoping SMCI's ship doesn't just sail through the storm, but like finds a whole new treasure island or something?
Exactly. A bigger pie for everyone, even with more slices. But we can't ignore the concerns, right?
Yeah, there's always a flip side. I mean, they've got this big deadline hanging out of their heads. They got to publish their financials by February 25th, 2025, or else they risk getting delisted from the NASDAQ. And that's not good, right?
Not good at all. That deadline is a major pressure point, for sure.
And then we got to talk about the elephant in the room, those rumors about Amazon potentially ditching them.
Ah, yes, the Amazon whispers.
If Amazon really does start assembling their own servers in-house, that's got to hurt SMCI.
Yeah, that's a big if, but if it happens, it'll leave a dent.
Do we know how much of SMCI's business actually came from Amazon?
That's the tricky part. The exact numbers are kind of hush-hush, not public knowledge.
Classic corporate secrecy.
But it's safe to say Amazon was a major customer, so losing them, well, SMCI would have to scramble to fill that gap.
And as if all that wasn't enough, there's the whole international incident brewing.
Oh, you mean the rumors about SMCI potentially selling hardware to Russia?
Yeah, that. What kind of trouble are they looking at if those rumors turn out to be true?
Let's just say the potential fallout is huge. We're talking serious sanctions, fines, trade restrictions, you name it.
Not to mention the hit to their reputation.
Exactly. It's a PI nightmare waiting to happen.
Okay, so let's recap. We've got this company making a risky play, share prices going haywire, deadlines looming, client uncertainties, and possible international incidents. It's a lot to take in.
It is. It really shows you just how complex these investment decisions can be.
Right. No easy answers here. So for folks at home listening to this and wondering, should I invest in SMCI? What's the takeaway?
Well, it boils down to this. Weigh the potential rewards against your own risk tolerance. Can you handle the uncertainty surrounding their client base and the regulatory shadows lurking in the background?
Yeah, can you sleep at night knowing all this is going on?
Precisely. Do you believe SMCI can overcome these obstacles and reach that potential everyone's talking about? That's the big question.
I guess the real question is, where does SMCI fit in your investment strategy? Is it a high-risk, high-reward kind of thing?
Exactly. Everyone's situation is different. My advice: do your research, consider everything we've talked about today, and most importantly, make the decision that feels right for you, for your portfolio.
And remember, the market's constantly changing, so stay informed and be ready to adapt, folks. Thanks for tuning into this deep dive. See you on the next one.
See ya.